Good morning, ladies and gentlemen. Welcome to the meeting, October 19th for Selectmen. If you have a cell phone, please put it on mute or turn it off. We will stand for the flag salute. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Okay, we have 3 meetings to go. The first one that's on the agenda is the municipal audit presentation. Since I lost my town manager already, there he is. Are they all set to go?
They are ready to go, yes.
They're gonna need an extra, how many chairs? They're gonna need a couple extra chairs. Good morning.
Good morning.
Good morning.
I'm not sure.
Good morning.
How are you?
How are you?
We're alive and that beats your
Nice
alternative.
to see you.
Nice to see you.
Nice to see you. Hello.
Hello, how are you?
Good, how are you?
Yes, you can.
Thank you. How are you? I'm good, how are you? Good.
All right, now becomes your show.
Oh, okay. Well, thank you for having us. My name is Cheryl Pratt. This is Mike Campo. I'm a director with Plodzik and Sanderson, and Mike is an associate, and he was in charge of your audit here for the 14 audit. And what you have before you is the 2014 audit report. And on page 1 and 2, this is your opinion letter. This is basically, the opinion letter is really what you're looking for. You're paying for this opinion of your financial statements. And we're pleased to say that you received a clean opinion, or what we now call an unmodified opinion, which is saying that your financial statements were fairly stated in all material respects. So you complied with all of the GASB pronouncements, and we always have new ones rolling through. So you've complied with all the statements, and that all your numbers were fairly presented, so things are good. A lot of places can't say that, but you can say that, so that's very good. Now, if you wouldn't mind turning to page, I wish I had a better way to do this, page 43, which is Schedule 3 of the report, and this is basically telling you where you started with your fund balance and where you ended with it's really your unassigned fund balance. Under GASB 54, we now have 5 different classifications of fund balance. And what I find what most boards are most interested in is in the unassigned fund balance. We used to call it unreserved, but that got eliminated with GASB 54. We now have non-spendable, restricted, committed, assigned, and unassigned. So here is a reconciliation of the unassigned fund balance. You started the year with $4,475,677. For the 2014 year, no prior year fund balance was used to reduce the tax rate. During the year, you did have a revenue surplus, and you did have unexpended balance of appropriations. So you underexpended your appropriations during the year. So your budget, your revenue surplus was 1.5 million, and you also had underspent your appropriation budget by 851,000, giving you a total overall budget surplus of $2.4 million. So that gets added to that beginning unassigned fund balance number. During the year, you did have a decrease in non-spendable fund balance, and that is either made up of prepaid items or of inventory. We decreased your financial decrease the restricted fund balance by $287,000. So by reducing the restricted fund balance, that adds back to your unassigned. Likewise, there was a decrease in committed fund balance, which again gets added back to the assigned fund balance, to give you an overall unassigned fund balance, which you would look at when trying to set your tax rate, which you're in the midst of right now, of $8.4 million. So you went from 4.4 million to 8.4. So that's very good. Also here, we do a reconciliation for reporting purposes, and this is called the 60-day rule. We're never big fans of this, but it's a reporting requirement that is required. And what we do is we analyze all your property tax receivables the first 2 months of the new year. So we look at, in this case, anything in January and February of 2015 and see what was collected on the taxes. And applied those to the receivables. Anything that had not been collected as of March 1st of those receivables gets reported as a deferred inflow. We used to call that deferred revenue, but now it's called deferred inflow of resources. That came into play with GASB 68. So as you can see, the GASB pronouncements just keep moving very quickly. We've got 54 came into effect 4 years ago, then 65 was about 2 years ago. So that we have to defer that uncollected revenue as a reporting entry. So if you wouldn't mind turning, and I'll show you on page 14, for reporting purposes, in the general fund column on page 14, you will see that we are reporting this new unassigned reconciled number of $8,062,204. Again, this is a reporting entry. This does not impact what you do for tax rate setting purposes. You do want to look at that 8.4. And you'll also see on page 14 the different types of your total fund balance is $12.6 million. $8 million being the unassigned, and as you'll see above, you've got non-spendable fund balance of $36,901, which is made up of prepaid items and tax-deeded property subject to resale. Restricted fund balance is made up of a combination of things, being water, sewer, and library fund balances. Under GASB 54, not only did they change the fund balance types, but they also require us to you to analyze your special revenue funds. What actually constitutes a true special revenue fund? The definition is if a funding source comes into a special revenue fund from another fund that is significant. What we consider significant is anything over 50%. So if funding is coming as a transfer from another fund, the standard says we have to blend that fund with the fund from where it came from. So that's why, and then we have to reclassify the revenue as such. So libraries, water, and sewer funds are considered restricted fund balance. The committed fund balance, again, going with the guise of the GASB 54, your committed fund balance is made substantially of your capital reserve funds. Again, because your funding source is transfers annually, typically, from the general fund to the capital reserves, we have to blend those back, and then we commit the fund balance for those purposes. Assigned fund balance is typically, and I believe it is 100%, yes, it's 100% your encumbrances. Encumbrances are always considered assigned fund balance. And a breakdown of those encumbrances can be found in the notes, and also on pages 41 and 42, we break them out by function for you on the schedule of appropriations, expenditures, and encumbrances. So that gives you an idea of your total fund balance for the year, of that 12.6 million. Also on page,
Could I interrupt
oh, sure.
you just for a second? On this page, and I'm talking 14, you have the total, which is your bottom. The far right column, far right bottom number of $24,605,550 is the one that we've got to pay particular attention to.
That number that is all your funds.
It's all the fund of the total government funds?
Yes, yes.
Okay.
So that's the total. So I was gonna mention is also so your general fund is kind of what you look at for operational purposes that you're mainly, principally concerned with. But then the other governmental funds are your other special revenue funds. And your permanent funds of your trust funds. Those can be found, and this is where I don't like all this page flipping, but there's no easy way to do this. Page 44 and these are the remaining, on page 44, these are the remaining funds that have not been blended with the general fund, basically the general fund, because everything got blended into the general fund. So if you look at the total column on page 44 and compare it to the other governmental funds on 14, you'll see what makes up those numbers. It's all those other special revenue funds, a capital project fund that's winding down, and then the permanent trust funds. Schedule 1 and 2, it's interesting because Schedule 1 and 2, the total, or I should Schedules C1 and C3 actually are used to build upon Exhibits A and B. A and B in the report, which I don't spend a lot of time with, those actually take all of the funds of the town and report them as one financial statement, a balance sheet and a statement of activities, which is, most people like to call them income statements. But that shows you where the town as a whole sits. The C1 and back are reported on a modified accrual basis, whereas Schedules or Exhibits A and B are reported on a full accrual basis. So at that level, we then will add in the capital assets, the debt of the town, so those get added in, so that you can see a whole picture of the town, with the exception of any private purpose trust funds or agency funds on those Exhibits A and B, okay? The interesting thing, and I don't know how really interesting we would like to call it, but in 15, there's a new GASB pronouncement coming out. It's called GASB 68. And as part of your financial statements now, we are reporting an other post-employment benefit liability that in some places is substantial. Here, your other post-employment benefit liability at December 14 was only $828,915. And I say only. That's small compared to the new liability that will be brought onto your financial statements at the end of 15, which is this new net pension liability that we're required to report. Similar to the OPEB liability, the other post-employment benefit liability, we will now be picking up the net pension liability. And in some towns your size, we've seen about a $12 million, we're looking at the schedules coming up for 15 audits, and it's gonna, some places it's $15 million liability. So what it will do is it will greatly impact the unrestricted fund balance, or unrestricted net position on Exhibit A. Won't have any impact on your governmental statements, which fortunately is what you base your tax rate on, and I think a lot of your banks for bonding purposes look at those, but they also look at these Exhibit A and B for bonding purposes. So I know some of the bonding companies are working with some accounting firms to try to understand it so that it does not impact bonds.
You're giving me bottom line that our liability in this year coming up is going to increase significantly just because of the new written statute?
Yes.
What do we have to do to protect ourselves so that we don't get into a bind? Now, is this just a numbers thing, or is it an actual facts and figures? Because I'm confused when you tell me that the liability is gonna go up. All right, liability goes up. I understand what liability is. But you're also telling me it's because of this new statutes. Well, right now, we've got 800,000 liability, and you're telling me it's gonna go up significantly. Is that money we have to be able to have available, or insurance for, or whatever?
Right now, it's unfortunately, it's a liability that has been on the books it's always been out there, but it's never been recorded. It's at the state level, but they're now saying that each entity has to report it on their books to reflect what is truly out there for your retirees. At this point, because it's still being, New Hampshire Retirement is still funding it, it's just a report, it's another reporting entry only. Down the road, I'm not sure. You know, are you gonna be responsible for some of that? Because it's so large, hard to say. But at this point, it's a reporting entry only, and it does just get reported on Exhibit A and B, which is the full accrual basis of accounting. And those statements, those are not they're important, but they're not as important for you to make management decisions for day-to-day operations. So it's.
I'm still a little, are these the real numbers, or are these accounting numbers?
If I may?
Yeah.
What it is the state of New Hampshire's retirement system is underfunded. And what they're doing now is they're allocating that underfunding throughout all their participants. So unfortunately, even if you were to go out and bond your full amount, it doesn't go against your dollar, your liability that they're saying you have. What it will do is it will go against the total pot, and then the reallocation of what the unfunded portion will be is then allocated. You're no different than any other government in the country. This is everybody who's going through this at this point. What they found is when they looked at it, these state pension systems are not funded at 100%. There are some, but New Hampshire's not one of them. In fact, I think New Hampshire's probably in the bottom tier of funded pension plans. So what it is it's not a bill that's gonna come across in 2016, 17, 18, but it's an indication that there's a liability. Your costs for your retirement are gonna go up going forward. And there are reports on the New Hampshire retirement system that breaks it out by municipality.
Yeah.
So Ray, today it's because it's a New Hampshire state, they're just assigning a portion of their unfunded liability to us. In Massachusetts, those communities actually have their own liabilities and are carrying statewide hundreds of millions of dollars in soon to be recognized OPEB liabilities that should be funded. So if it was ours, the answer to the question would be you should start to fund it. And I think they would be telling you that too. Yeah. If you fund a liability, the liability goes away eventually. If you put a funding schedule in this case, I think it's still up in the air, but it's something that you're gonna see on the books.
Well, that was my question. Are we gonna get this live? Okay. I'm not worried about 2016. To be very honest with you, I'm not worried about 2020. But 2021, if this wraps us, this could make a significant difference to every taxpayer in the town of Seabrook. And that's why I'm asking,
Right.
where is this? That's why real numbers, accounting numbers, or whatever, and it rings a warning bell with me. When you tell me liabilities, and it could go up, now granted, $1 million isn't, or 800,000 isn't an overly amount, but you're telling me next year that's gonna go up, and my gut instinct says it's gonna be one of those progressive things that every year is gonna go up. Well, if we don't address it now when it's a small problem, by the time it gets to be a big problem, we may not be able to address it. That's why I'm asking.
Right, and this is different than OPEB, in that
Yeah.
OPEB, you can fund that. Your liability is yours. It's not a fraction of the whole. OPEB, your $828,000 number, that's what your actuaries have come out and said your liability is. You could start a capital reserve fund, fund it, and offset that liability. With this New Hampshire retirement, unlike in Massachusetts where it's, the individual towns may have their own retirement system, you're part of the New Hampshire retirement system. So if you were to go and start a capital reserve fund for net pension liability, Unfortunately, it doesn't offset your direct liability they're saying you have. It goes back to the pool and it will reduce everybody's.
Yeah,
That's not good either. All right.
yeah.
Yeah,
but-
it's
Okay.
unusual, and I mean, it's still,
And
this
it's
is
still
the first
early.
year.
Yeah, this is the first year in 15 that we will be, and actually, we're starting to do a lot of we've got some junior end towns that we're working on it right now. So we're still, finding our way through it as well. So we just wanted to bring it to your attention that you will be seeing a large liability coming up on those full accrual basis statements only.
All right. Sorry to interrupt.
So,
Go ahead.
so that was, so that's basically, I just wanted to bring that to your attention. And the nice thing also, if, you'll notice on the table of contents, is that we did not have any material weaknesses or significant deficiencies. So that's very commendable, and we do a lot of testing in a lot of different areas. We do analytical, we do test of controls, we do a lot of analysis. So you should be very pleased. Proud of things, efficiency things we've gone over, but no significant deficiencies and no material weaknesses. So with that, and the other thing too, just if you want, the notes to the financial statement start on page 21. And those notes will detail, and I won't take you through every single one, but if you want to look at a number, somewhere in the financials, what makes up the capital assets, we have a schedule in there to break it down by major piece. It doesn't detail every single asset you have, but major categories. So those notes are useful to help you understand those larger numbers in the report. So with that being said, is there any questions that you may have?
Abul?
Yes, Mr. Smith, I have a couple of questions. Tell our taxpayers that how many years your company is doing this independent audit for our town.
This was our second year. There was there was a hiatus of a year, and prior to that, we have done the audit. Not me, I think I did it personally maybe 2 years or 3 years. Prior to that, that was Bob Sanderson, who was also with our firm. That was many, many years, probably 10 plus years.
Yeah. So my intention was asking this question is you are with the town of Seabrook for many, many years.
Yes.
Did you see any different, this year's audit than other year you did? Since the town adopted few different policies, the town manager Manzi, the centralized purchasing and a few other things. Did you see a difference?
I'm gonna actually have
Yeah.
Mike address that.
Yeah, I would say that your policies that they've been implemented they are taking effect, and things are proceeding more smoothly, more in order. There's less variation from transactions where there used to be. I think a good example is the purchase orders. I think you've really nailed down purchase orders. But in general, yeah, the policies are effective. It's great to have policies. It's really what you want is to follow the policies. And I think that's what Mr. Manzi and your finance department has really emphasized, and you can see the results, in my opinion. And I mean, I don't have as much experience in Seabrook as Cheryl, but I think I probably have at least 4 years here, and absolutely.
So the reason, your opinion page, usually 2, 3, 4 pages I've seen in my time, the last 8 years. This year is about page and a half, so that's very, very good results. Tell us about, for our taxpayers, the internal control.
Mm-hmm.
How are we doing on that? And tell us that how many layers we have. If one layer misses something, the next layer catches. Please
Yep.
tell us.
Okay. I'll start and I'll let
Okay.
you
Sounds good.
chime in.
Yep.
What we do is we identify all your significant areas of controls. We look at and we document, we interview people. What are your procedures and processes over cash receipts? Not only here in the selectman's office, but with the tax collector, the clerk, the police department, the recreation department, the library. Same with payment of bills, how capital assets are capitalized and disposed of. So we find and detail water and sewer billings. We have, I call it a tree. We keep a log in our files, in our computer. We document every single control. Then after we document it, we say, okay, how are we gonna best, and actually once we've documented it and then updated it the next year, we actually will pull a one or two different random transactions from every single control that we have documented and updated. And we test that transaction through the system. Did it work the way that you say that you have, that you do things? If we don't see it work, we may pull another one, or we'll discuss it with everyone and say, okay, we may have an issue here. Also, when we do document the controls, we look at them to say, do they make sense? Are you mitigating any risk? Is there risk here? One big risk would be a segregation of duties, one person doing everything. So we look at that to make sure that you've got good controls in place. And if we see that there may be a leak, maybe one little weak link, if you will, we'll address it immediately with Mr. Manzi in the finance department. You may have a little, you may want to tighten this up a little bit. So then based on that, we will then decide in some of those really big areas, we'll do a test of controls. We test a number of, 40, 60 transactions and take them through the process to make sure there's no, we may look at one transaction, but if we can look at 40 and 60, we're definitely going to see a pattern there, that there could be an issue. Didn't have that type of issue. The other thing we will also do is we do a large and unusual test. Everything goes, and we actually test those transactions for the control process, but also we look for any large, why are you paying, it's obvious to us, but we want to verify that you're paying the bank. It's because of a loan you may have outstanding. Or why is there a check cut out to Mr. Khan? That could be unusual. I just want to emphasize that could be unusual to us, which we didn't see that, but we'd say, oh, why are they cutting a check to him? So we look at the documentation. Is that reasonable? So that we look at the controls. We do billings tests, water, sewer. Is everything going through your processes the way it should be? So we do a lot of that control testing to make sure, and again, I only hit on several, but I think we've got 18 or 19 different controls that are fully documented. The budget process, we've got them all documented and they are tested.
So, go ahead.
Sorry, I think to your point, you're kind of asking, or what's the level of monitoring that we're seeing? And I think that since Mr. Manzi's come in, we're seeing a lot more management oversight of these transactions, and when appropriate, management approval has been brought in too. An example is if a department head's filling out their timesheet, they really shouldn't be the one authorizing their timesheet, so now that's done by that department. So when we evaluate the controls, that's one of our considerations is there monitoring here? Is it a good control that lacks monitoring? And that's, I would say that since, working with Mr. Manzi and your finance department, they've addressed that in your control process. And the monitoring is there. The other aspect with controls is you don't want to implement a control that costs more than the benefit. And I think that that's something that your current management has addressed. And they have efficient controls, appropriate and efficient controls that, in our opinion, are working properly.
Every year when you do the audit, you have some recommendations, 2013 recommendation, did we fulfill all those, our obligations? Can you tell us?
Yes, you did. We had a chance to, the nice thing about the 13 audit was you had enough time to implement everything. So as soon as the recommendation, honestly the recommendations were made during field work. Even though you guys probably see them at the finished product, management receives them as they're detected. And they give us immediate feedback. And in a lot of cases, I believe last year, and you can correct me if I'm wrong, as they were coming across, they were already issues that you were addressing.
Yes.
That was common where we came in and said this was inappropriate. And excuse me, I don't remember what they all were last year. I can just tell you that we do a work paper to review them and none of them triggered again this year.
One of them was, and I don't remember all of them either, but one of them was that there was highlighted, I think, some procurements that didn't comport to our own rules and regs. And I don't think there were a lot of them, but it was, the ones that were there were highlighted, and we addressed it even before the report got to the board. But also, they had made some recommendations relative to centralized purchasing. And we implemented those before they left the building as well. So they're good enough to give us some ideas as they're doing the audits. Say, hey, we're looking at this, and what are your thoughts about that? And generically, we find that they give us some, and we don't feel we need to wait for the report to get to the board to start implementing. You know, they this year, the board, just one quick example, the board had ratified earlier, I don't know, 2 months ago, a new investment policy. And that was something that the auditors had said that, you know, we should look at. Where's your annual board approval of an investment policy? So we not only got you up the incumbent policy, we changed it. So those are things that happen in the field, and we're grateful for that.
And we're happy to see that type of response, because a lot of times, wherever we go, we'll go in and do the same type of thing every place we go, but a lot of times it falls on deaf ears, and we come back the following year and nothing got done. So it's refreshing to see that it's addressed, and it's, you know, it's important enough, and you address it immediately. So that's very refreshing to see.
Because your audit is totally independent, tell us that all our town organs cooperated with you fully. You have any issue with any department anywhere?
No, we had 0 issues with any departments. Everybody was very helpful when we came in, and if they didn't understand the request, they took the time to understand.
Mr. Smith, I'm all set with the other questions.
Teresa?
Just from what I've heard, I'm not going to elaborate, Seabrook is in pretty good position, functioning better than other towns and cities, have adopted new policies, which are very good, and all we have to really look out for now, other than doing what we're doing, is the GASB 68 and our retirement system.
I would
That's what
recommend
I got
becoming
from all
familiar
of
with
this.
GASB 68, because
Yeah.
it is, I mean, from our standpoint, this is something we do on a daily basis, and this is a monster for, this is big.
Yeah.
This is not a quick, you know, quick and fast pronouncement. This is something we've divested a lot of our time, personal time. If
Yeah.
we're on the weekends, we're reading about GASB 68, as pathetic as that sounds. But it's that big and that important. So I would suggest, you know, if you have questions, run them through the town manager by all means, and we'd be happy to answer them. If we don't know the answer, we'll look it up.
Yeah.
But, I mean, this is something that it is going to impact your financial statements. And it's a national issue. It's not exclusive to Seabrook or exclusive to New Hampshire. It's going to be across the country, and we're all going through it together the first time, so the more questions, the better.
Yeah.
So
And you
please
can,
don't hesitate.
and you can
Sorry.
also Google it as well. You can Google GASB 68, Statement 68, and you can go on to the GASB website, and you can actually get the full pronouncement, or they have a summary version. So you could just read the summary version. It's probably 5 to 8 pages long. To give you a synopsis, but the full pronouncement is over 300 pages. It's a
Terrific
beast.
read, too.
The other thing you could do is you could actually go on to the state of New Hampshire's New Hampshire Retirement System website, and they have their audited report there. You can actually look up the town of Seabrook and see what type of numbers they're talking about. So that can be done as well. But yeah, if you ever have insomnia, just Google that, and that will do it for you. That'll put you right out.
Well, this is really nice, and I hope people are watching to see that our town of Seabrook is right up there. So when we're being criticized by other towns, it's not warranted. We should be very proud of what we are and what we're doing and how far we've come.
Mhm.
Thank you.
Yes, thank you.
Oh, and did Bill Manzi pay you to say all that?
No, he did not.
No.
We appreciate the opportunity to work with people like Mr. Manzi and Kerry Fowler and Rick Donaldson. I mean, we don't have this pleasure everywhere we go. There's sometimes trying to do what we do is like pulling teeth. Information is provided when requested. It matches the request, and it really, you've got a good staff here.
Yeah, yeah.
Okay, semi-numbers person. Approximately how many communities in New Hampshire of similar size do you work with? Similar size?
It's, we work with a lot of.
I would say like 20 of this
Yeah.
size, at least 20, 30.
If you had to rate our efficiency in doing things compared to those 20, and I realize I'm calling it out loud, would you put us in the top 25%? Would you put us at the 50%? Where would you put us as a town, as how we operate presently?
I would say the top 15%, I'd
Yeah.
be comfortable with that.
Yeah,
That's pretty good, right?
yep.
And otherwise than that,
Yeah.
if there are no other questions,
I
Bill?
one quick thing on that is that, notwithstanding the audit report, and the auditors, I think, would tell you that, there's always, and there is here, always room for additional, improvements, and there are, and, you know, government tends to be an incremental enterprise, but improvements are still there that need to be made. Additional policies and additional things that maybe aren't in the report, but that we recognize we need improvement on. So we don't look at this as something that says, oh, geez, we get a halfway decent audit report and we're gonna stop. We need to continue to work towards making improvements. So maybe the next time you ask that question, they say, well, they might be in the top 10%. So the improvements still have to come. Secondarily, I would like to, I know the auditors did it, but both Rita Donaldson and Carrie Fowler here, and both worked hand in glove with the auditors. I'd like to recognize both of their work because they did really, really outstanding work all year, and I'm grateful as the manager. So thank you all. Thank you, Rita. Thank you,
Thank you.
Carrie.
All right, thank you very much.
Thank you.
Thank
have
you
a
very
nice
much.
day.
You too.
Well, that being said, John, you have the floor, my friend.
Good morning.
Good morning, John.
Just like you to know that I'd rather